The price of gold is soaring. Investors are flocking to the precious metal driven by fear and uncertainty. The global landscape is fraught with risk, and a new era of volatility has begun. On February 5, 2025, gold hit a record high, reaching $2,880 per ounce. This surge is no accident. Global events are at play. The return of Donald Trump to the political stage is a major factor. His policies are unpredictable, creating anxiety in the markets. The world watches with bated breath. Gold has become a safe haven, a hedge against instability. Investors are seeking shelter from the storm, turning to gold for security. The future is uncertain, but one thing is clear: gold is in high demand. It is a beacon of stability in turbulent times. The yellow metal is once again proving its worth. The return of Donald Trump has sent shockwaves through global markets. His re-emergence on the political stage has reignited fears of economic instability and uncertainty. Investors and analysts alike are bracing for the potential upheaval that his policies could bring. The financial world is on edge, watching closely for any signs of the next move in this high-stakes game of international trade. His policies are unpredictable and often disruptive, creating a climate of fear and uncertainty, particularly in the realm of international trade. The volatility in the stock markets is palpable, with traders and investors reacting to every announcement and tweet. The uncertainty is not just limited to the United States, it reverberates across the globe, affecting markets in Europe, Asia, and beyond. Trump's penchant for tariffs is well documented. He views them as a tool to protect American interests. His administration has frequently used tariffs as a bargaining chip in trade negotiations, aiming to secure better deals for American businesses. However, these tariffs often come at a cost, leading to higher prices for consumers and strained relationships with trading partners. However, tariffs often lead to retaliation, escalating into trade wars that damage economies and disrupt global supply chains. The impact of these trade wars is far-reaching, affecting everything from the price of everyday goods to the availability of critical components for manufacturing. Businesses are forced to navigate a complex and uncertain landscape, making it difficult to plan for the future. The mere threat of new tariffs is enough to spook investors, especially when it comes to gold. The precious metal is often seen as a safe haven in times of economic turmoil. When the markets are volatile and the future is uncertain, investors turn to gold as a way to protect their wealth. The demand for gold increases, driving up its price. When trade tensions rise, the yellow metal is seen as a safe haven, and investors flock to its perceived stability. Gold has a long history of being a reliable store of value, and in times of crisis, it becomes even more attractive. The current climate of uncertainty has only heightened this appeal, with more and more investors seeking refuge in gold. Trump's recent actions have only heightened these fears. His announcements and policy decisions are closely watched, and each one has the potential to send shockwaves through the markets. The unpredictability of his administration adds to the sense of unease, making it difficult for investors to anticipate what might happen next. On February 3, 2025, he imposed a 10% tariff on all Chinese imports. This move was seen as a significant escalation in the ongoing trade tensions between the two economic superpowers. The tariffs affect a wide range of goods, from electronics to clothing, and have far-reaching implications for both economies. This aggressive move drew a swift response from Beijing, as China retaliated with tariffs on U.S. goods. The tit-for-tat measures have reignited fears of a prolonged trade war, with both sides digging in their heels. The impact on global trade is significant, with businesses and consumers feeling the effects of higher prices and disrupted supply chains. The trade war is reignited, sending a chill through the markets. Investors are wary, and the uncertainty is reflected in the volatility of stock prices. The global economy is interconnected, and the ripple effects of the trade war are felt far and wide. Analysts are concerned about the long-term implications for economic growth and stability. Gold, however, is thriving, viewed as a hedge against the economic fallout of a trade war. The demand for gold has surged, with investors seeking to protect their assets from the potential downturn. The price of gold has been steadily climbing, reflecting its status as a safe haven in times of crisis. Its price continues to climb as investors seek safety. The trend shows no signs of slowing down, with many experts predicting that gold will continue to rise as long as the trade tensions persist. For investors, gold represents a stable and reliable option in an otherwise uncertain economic landscape. The recent surge in gold prices has sparked a heated debate among market analysts and investors alike. This sudden uptick has left many wondering whether this is the start of a prolonged bull market or just a temporary spike. Some experts see this as the beginning of a sustained bull market, driven by factors such as inflation fears, currency devaluation, and increasing demand from both retail and institutional investors. They argue that the fundamentals supporting gold are stronger than ever. On the other hand, there are those who believe a market correction is inevitable. They point to historical patterns where rapid increases in gold prices are often followed by significant pullbacks. These analysts caution that the current surge might be a bubble waiting to burst. Don Durrett, a renowned gold expert with years of experience in the market, predicts a potential pullback in the near term. He suggests that while the long-term outlook for gold remains positive, investors should be prepared for some volatility. Durrett believes that gold could fall to the $2,350 to $2,400 range before resuming its upward trajectory. This dip, he argues, could be a healthy correction that sets the stage for future gains. However, he remains bullish in the long term, forecasting prices to reach $3,200 to $3,400. He cites ongoing economic uncertainties and central bank policies as key drivers for this optimistic outlook. Keith Weiner of Monetary Metals shares a similarly optimistic view, but with a slightly different perspective. He sees more upside potential than downside risk, emphasizing the role of macroeconomic factors. Weiner points to the ongoing war, escalating debt levels, and geopolitical instability as factors that could continue to support gold's rise. He argues that in times of crisis, gold often serves as a safe haven for investors. However, he also warns that a credit crisis could put downward pressure on prices. If financial markets face a severe liquidity crunch, even traditionally safe assets like gold could see a temporary decline. Drew Martino of Savvy Wealth takes a more opportunistic approach. He views recent dips in the gold price as prime buying opportunities, especially for long-term investors. Martino believes that long-term investors should take advantage of these dips to accumulate positions. He sees gold as a key component of a diversified portfolio, providing a hedge against market volatility and economic downturns. According to Martino, having gold in a diversified portfolio can offer stability and reduce overall risk. He advises investors to consider gold not just as a speculative asset but as a long-term investment. James Cordier of Alternative Options offers a more cautious perspective. He cautions that economic decisions and geopolitical events will play a crucial role in determining gold's future. Cordier suggests that efforts to control consumer prices, such as interest rate hikes and fiscal policies, could lead investors to shift away from gold. He warns that these measures could dampen gold's appeal as an inflation hedge. The experts are divided and gold's trajectory remains uncertain. While some see a bright future, others urge caution, highlighting the many variables at play. Investors are advised to proceed with caution, keeping a close eye on market developments and being prepared for potential volatility. The road ahead for gold is filled with both opportunities and risks. The world is a volatile place, constantly shifting and changing in ways that can be both unpredictable and unsettling. Wars rage, tensions simmer, and geopolitical instability is the new normal. From the Middle East to Eastern Europe, and even in the South China Sea, conflicts are erupting and evolving, creating a landscape of uncertainty. In times of crisis, investors seek safety, turning to assets perceived as safe havens. The stock market can be volatile, currencies can fluctuate wildly, and real estate can be subject to local economic conditions. But gold is different. Gold has long held this coveted status. For centuries, it has been a symbol of wealth and security, a tangible asset that people can hold in their hands. Unlike paper money or digital assets, gold has intrinsic value. The yellow metal has a unique allure. It is a tangible asset, not tied to any specific currency or government. This independence from any single nation's economic policies or political stability makes it a universal store of value. This gives it a sense of permanence and stability that is particularly appealing during times of turmoil. When everything else seems uncertain, gold remains a constant, a reliable store of value that can weather the storms of global instability. The ongoing global conflicts are contributing to gold's current rally. The war in Ukraine, with its devastating impact on the region and its broader implications for global security, Tensions in the Middle East, where long-standing rivalries and new flashpoints continue to create instability, and the escalating rivalry between the United States and China are all fueling demand for safe haven assets. These geopolitical tensions are not just regional issues, they have global ramifications that affect markets and economies worldwide. A recent survey by Bullion Vault, an online platform for buying and selling physical gold and silver, found that 22% of their users cited geopolitics as the primary driver of gold prices. This statistic underscores the significant impact that global events have on investor behavior. This highlights the extent to which global uncertainty is shaping investor sentiment. As investors look for ways to protect their wealth, gold emerges as a preferred choice, offering a hedge against the unpredictable nature of global events. As long as these conflicts and tensions persist, gold is likely to remain in high demand. The metal's historical role as a safe haven asset is being reinforced by the current geopolitical climate, making it a go-to investment for those seeking stability. It is a beacon of stability in a world teetering on the brink. As we navigate these uncertain times, gold stands out as a symbol of security and resilience, a testament to its enduring value in an ever-changing world.